Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. Starting on the high time frame, the daily chart with the bullish scenario where we're looking for an impulse to the upside in a wave 1, followed by 2 and then a wave 3. Now this impulse to the upside is very long to previous wave 1s. As you can see, this was the previous wave 1 that then started the bull market. So that is something we do have to keep in mind with the probabilities. But what is more important to me is actually this structure to the downside here. Because if this is only a wave A to the downside and we are looking for a zigzag in wave 4, then we are looking for a wave A, B and then a wave C. Which means that the most common target for a wave C preferably is not hitting this 0.618, but what you can see here on the chart is that if I pull a trend-based SIP extension from the high to the current low to the high that I have over here, which is the high on top of this target box that I have over here at 46k, then the common target area for a wave C is in confluence with the 618. Now the 1-to-1 of course is a target, so it doesn't mean we hit the 618, but of course the lower this move goes, the higher the probability that price will hit the 0.618 in a wave A, B and a wave C scenario, which then would invalidate this bullish scenario because a wave 4 is not allowed to hit the 0.618 at 34.1k. Now the remaining bullish scenario we then have is a double 1-2, wave 1-2, 1-2. This wave 2 here retraced to the 0.382, less common for wave 2, more common for wave B. But I'm not really interested in the 382. I'm more focused on this 1-to-1 here. This is a 1-to-1 taken from the low to the high of 1 to the low of 2 to compare this wave 1 in price with the second wave 1 in green in price. And the green count here is a lower degree Elliott wave count, which means that preferably the second wave 1 is shorter in time and price compared to the first wave 1 here. Now it is shorter in time, but it is not shorter in price. It is actually longer in price here on the linear chart. If you switch to the log chart, then yes, this wave 1 here is below the 1-to-1, but look what it does with your wave 2. Your wave 2 does not even hit the 0.382, which is incredibly rare for a wave 2 because the 0.382 is already a less common target. So therefore I prefer the linear chart, and this is not really what you want to see, lowering the probabilities for this scenario as well. Nonetheless, this is your target area for a wave 2 here between the 05 and 786 taken from the low to the high, which is between 37k and 30k, preferably finishing after the 0.382 fib time taken from the low to the high, which is on the 19th of February 2024 minimum. Now if price then hits the 0.618 shown in the first scenario at 34.1k, it does increase the probabilities for this ABC also compared to the double 1-2. Of course, it is very early to call, right? We only have one structure to the downside. We are still waiting for then a relief rally and a continuation, which then can be a wave C or a wave 3, depending on the retracement we get to the upside. However, when we look at the wave C target area, it is respected. Wave B common target is the 382, and also time-wise, this wave C could have a high over here. If we then zoom in to the 4-hour chart and we look locally at what has been happening, price is grinding towards the downside. Something that we have to keep in mind is that so far price is moving down while volume is decreasing. So the peaks are becoming lower and lower while price is moving down, which is at least a little bit of a bullish sign compared to a potential bearish scenario where you're already looking for a wave 3 to the downside in a 1-2, 1-2 and then a bigger 3 down. So the probabilities remain higher to look for a little bit of a relief rally. However, of course, that means we want to see some local proof of support. Now in this particular scenario, we are looking for a diagonal in a wave 1, 2, 3, 4, 5. All of the waves have to be zigzag family structures. Wave 1 being a zigzag finished to ABC, then we have a WXY in wave 3, a double zigzag to the downside. This is the common target area for your wave Y, which at the moment is respected. No problem if price moves to the downside because the 1.618 is still a target for Y but less common. So preferably you only wick the low and then start moving towards the upside, where currently the target area for 4 pulled from the high of 2 to the low of 3 is over here, as you can see, the 0.382 to the 05, 40.4k to 41k. What we don't like to see is price hitting the upper trend line of this channel in this particular scenario, because the moment price moves towards the upside and hits the upper trend line, it invalidates a contracting diagonal, which is by far most common, and then we have to start thinking about expanding diagonals, but an expanding diagonal is very, very rare, therefore never preferred. So if price can hit the upper trend line, probabilities go up for a bit of a bigger rally towards the upside. In this scenario, we are then looking for a zigzag structure in 4, eventually a zigzag structure in 5 to the downside, where an important support area is the yellow box that we have over here. We have a weekly naked point of control over here at about 37.7k and a monthly naked point of control at 36.9k. 37k pretty much, which is what you can see over here, right? 37k, 37.7k. So this yellow box is very important support for price and therefore also for this wave 5. After this wave 5 is then in and then potentially this diagonal, we are looking for a corrective structure to the upside in wave B or 2. Currently, I pulled these fibs from the high to the potential low at 37k on the monthly naked point of control, giving you this target area here. For a wave B, the target area is the 302 to the 886, 41.5 to 47.7, and for a wave 2, target area is the 05 to the 786, 43 to 46k. Currently, however, we don't yet want to see price moving to the upside because the invalidation is wave 2. Wave 4 is not allowed to go above wave 2. But as explained with the higher time frame scenario, if this is only your A to the downside, your B preferably has to move to the higher levels, meaning towards that 786 area for a wave 2 or a wave B if price is moving down to the yellow box. If price made a low over here and we're going to start moving to the upside, then still the 786 and closely the golden pocket is in confluence with this box over here. But yeah, you do definitely want to see price moving towards the upside for then a potential C to the downside if we want to remain in a bullish scenario. If we then look at the most bullish scenario, then we're looking for a double zigzag to the downside here and then a zigzag W, then we have X and a longer zigzag structure to the downside in wave Y. Now the local count over here is not very nice. You need a 1, 2, 3, 4, 5 in A, which is a little bit awkward on the lower time frames. This being a wave B is also a little bit of a weird wave B here, and then we need a 5-wave structure down in C. But this is pretty much at the moment the most bullish count that one can have, unless we are looking for a flat structure in an ABC, which of course is also an option compared to this one that I have on the chart. Now for a wave Y, the common target here is between the 0.618 and the 1.236, 38.8 to 34.1k. Keep in mind, we actually don't want to reach this level because of the invalidation on the higher time frame. And if we look for an ABC, then the current common target over here has been hit, finding a little bit of support. But as I will show you, there's a little bit of a problem on the lower time frames that we also have to keep in mind. The bearish scenario would be an impulse to the downside in a 1, 2, 3, 4, 5, right, where your wave 3 usually minimum target is the 1.618, sitting at 31.2k. But as I've written on the chart over here, currently price is moving towards the downside, but volume is also moving towards the downside. And that's not really what you want to see in a wave 3. You definitely want to see volume moving to the upside while price is moving impulsively to the downside. However, in order for us to become bullish, we either have to flip some support resistance levels or get a bit of a bigger range so that we can reassess the probabilities for potential bullish behavior back towards the upside. There is, of course, as mentioned, the opportunity for an A, B, and a wave C, where a wave C is also a 5-wave structure, which means that this diagonal here might be an ending diagonal in a wave C, after which this A01 is not an A01, but instead it's the end of a wave 5, end of a C, and we're going to see price moving towards the upside. It very much depends on the retracement we then get towards the upside, because if we're looking for a wave 5, we need to see an impulse to the upside. If we get any corrective structures to the upside, we are going to be looking for a move to the downside, which currently does have the higher probabilities. Now to the downside, we have this range over here on the chart. Important support for price, 38.2k, 37.3k, that's the point of control, which is in confluence with the golden box as well. Losing this point of control and probabilities do increase to move towards the lower end of the range at 34.7k. Above price, this is now important resistance. We've been in this range for a while. This is a big support resistance area over here around 41k, right? And price definitely has to get back in the range, flip this to support to then have probabilities to move to the other side, with the point of control being important resistance at 42.6k. Locally, on the lower time frame, we have hit an 886 and price has been moving to the upside, at least a little bit of a solid reaction from the target box over here, where we also had the daily naked point of control. But as we got this bounce to the upside, the retracement hit the 886. The moment an 886 is hit, probabilities go down for this move to be impulsive, probabilities go up for this move up to be corrective, as the 886 is a rare target for a wave 2, common for a wave B or a wave X, increasing the probabilities that this move to the upside is a corrective structure, not an impulsive structure, increasing the probabilities to take the double bottom here sooner or later, which also increase the probabilities to then move towards the downside to the weekly naked point of control and the monthly naked point of control. And you also now realize what that can do with the higher time frame count, because the lower price goes here, the more difficult it becomes to count this as an A, B, C and still be bullish, right? So that is something we do have to keep in mind. Currently, the CVD locally is neutral. There are no bullish nor bearish CVD divergences. However, we do know the 886 is hit. So if we do get bullish CVD divergences, keep in mind the 886 over here as well, with the probabilities that are attached to it. And if we do get bullish CVD, we have to observe the reaction, right? So if we then finally look at the probabilities of the different scenarios, then on the micro, right, on the 15-minute time frame, probabilities at the moment are higher to take this low because of that 886 touch, which impacts the probabilities. Keep an eye on what CVD shows, of course, potential bearish CVD or bullish CVD locally, always interesting to keep in mind, but especially that 886 is impacting the probabilities on the micro time frame. On the lower time frame, 4 hour and pretty much this whole move to the downside, we are keeping our eyes open for a move to the upside for a bit of a relief rally. However, of course, we want to see a bit of a range and proof of support, and an 886 touch here is of course not great, but we are going to keep an eye, of course, on the CVD divergences as well. And based on a move to the upside, whenever we're going to get a move to the upside, we know what kind of scenario we're going to get. If it's going to be an impulse, we could look for a 5, but the moment it's corrective, we're going to be looking for bearish scenarios, which at the moment has the highest probability, looking for an A, B, C or a potential impulse, and then a wave 1, 2, and eventually a wave 3 to the downside. On number 2, I have the bullish scenario, where we're looking for a potential wave C to the downside and a 5 up, or the WXY, but probably prefer the ABC to be honest. And on the third place, I have an impulse to the downside, where we then have a wave 1, 2, 1, 2, and we look for wave 3 that currently has the lowest probabilities, also because of the volume and the structure that we have to the downside so far. So I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.